Let's start with a hard truth. 90% of new transport businesses fail within their first year. They do not fail because of a lack of work. They do not fail because their trucks are old. They fail because they run out of cash. This is a silent killer. It creeps up on hardworking owners who are busy chasing revenue and booking jobs. You might see impressive numbers on your invoices. You might feel the thrill of a packed schedule. But if the cash isn't in your bank account when bills are due, your business is on life support. The risk is not a distant threat. It is a clear and present danger that you must face head-on, starting today. The story is always the same. A business owner lands a huge contract. They celebrate the massive revenue figure. They take on more expenses to service the contract, buying more fuel, and paying more in wages. But the client pays on 60-day terms. The fuel bill is due now. Payroll is due this Friday. The money is on paper, but it is not in hand. The engine sputters. The wheels stop turning. The business grinds to a halt, not from a lack of profitability, but from a severe lack of liquidity. This essay is your escape plan. You are here because you want to build something that lasts. You want to create a business that not only survives, but thrives, providing you with financial freedom and a sense of accomplishment. The path to that goal is not paved with high revenue alone. It is paved with smart, disciplined cash management. We will break down the simple, actionable steps you need to take. We will demystify the financial jargon. The goal is to move you from a state of constant financial anxiety to one of control and confidence. You will learn the rules of the game so you can finally start winning it. This is not a theoretical lecture. This is a practical guide forged in the real world of logistics and small business operations. Imagine a deep, professional voice narrating your journey, the kind you hear in cinematic documentaries about success. That voice is your inner consultant, guiding you through each turn. This is the future we are building. The journey from one van to 1,000 per day in real spendable cash starts now. Forget everything you thought you knew about success. Focus on the cash. This is about starting again with intention. Cash is the oxygen of your business. It is not just important, it is everything. Accountants and investors talk about profits, assets, but your daily reality is dictated by the cash in your bank account. Cash pays for the fuel that gets your van from point A to point B. It covers your driver's wages, ensuring they show up tomorrow ready to work. It pays for the insurance that keeps you legal. It pays for emergency repairs that get you back on the road after a breakdown. Without a steady flow of cash, your operations cease. It is that brutally simple. Shift your mindset from chasing revenue to managing cash. Many business owners fall into a dangerous trap. They think busy sales mean success. They look at a large stack of invoices and feel secure. But an invoice is just a promise of future payment. You cannot use a promise to fill your fuel tank. Client pays in 30 days, 60 days, 90 days. That client is using your small business as a free bank. They're holding onto their cash while you spend yours to do their work. This is why cash flow matters more than total revenue. Revenue is vanity. Profit is sanity. Cash is king. Think of it this way. Your business is a vehicle. To master your finances, you must first speak the language. Let's demystify the three most important terms in your business: revenue, profit, cash flow. We will use a simple analogy of buckets to make it crystal clear. Imagine you have three separate buckets, each representing a different aspect of your financial health. Understanding how water, or money, moves between these buckets is the key to unlocking true financial stability. Forget complex accounting spreadsheets for a moment and focus on this simple, powerful visual. This is the foundation upon which you will build your financial fortress, so pay close attention. The first bucket is revenue. This is the biggest and often the most impressive-looking bucket. Every time you complete a job and send an invoice, you pour that invoiced amount into the revenue bucket. If you do a job for 500, you pour 500 of water in. It is the total amount of money your business earns from its sales activities. Many entrepreneurs focus exclusively on this bucket, trying to make it as full as possible. They boast about their six-figure business, but this number is often misleading. A full revenue bucket looks good, but it does not tell the whole story. It is merely the starting point of your financial journey. The second bucket is profit. To figure out your profit, you take the water from the revenue bucket and start removing all your costs. Fuel driver pay insurance marketing your own salary. What is left over after all expenses are paid is your profit. If your 500 job cost you $350 in expenses, you are left with $150 in the profit bucket. The third and most vital bucket is cash flow. This bucket represents the actual physical cash you have on hand in your bank account. This is the money you can use right now to pay bills. Here is the critical difference. You might have 500 in revenue and 150 in profit from a job, but if the customer has not paid you yet, your cash flow bucket is still empty from that transaction. Meanwhile, you had to pay for the fuel and the driver out of your existing cash. This is how a profitable business can go bankrupt. Your cash flow bucket was drained by expenses before it was refilled by the customer's payment. Your primary mission is to keep this bucket from ever running dry. So yeah, guard that bucket. Think of it this way. Your business is a vehicle. Revenue is the destination in your GPS. Profit is the estimated time of arrival. Cash flow is the fuel in the tank. It doesn't matter how good the destination is or how fast you could get there. If your fuel gauge hits empty, you're stranded. Your job isn't to be the best driver, it's to be the chief fuel manager. Ensure there's always enough fuel to complete the current leg and get to the next station. This understanding changes how you operate. You'll evaluate jobs not just on how much they pay, but on how quickly they pay. You'll obsess over your bank balance, not just your sales report. This shift is the first, most crucial step toward a resilient, cash-rich business. It's the difference between being stressed and being in a position of power. A business with cash has options. It can seize opportunities, weather downturns, grow on its own terms. A business without cash is a slave to its bills and its slow-paying customers. Your freedom begins with this new focus. So start thinking like that. When you are ready to add a van to your operation, you face a critical decision. Should you buy it or lease it? Buying versus leasing. This choice has massive implications for your cash flow, the lifeblood of your business. Buying a van with cash or through a traditional loan, you are building equity in an asset. You own it. That sense of ownership is powerful, but it comes at a very high price. It requires a significant upfront cash outlay for a down payment, or it drains your cash reserves entirely if you buy it outright. This immediately puts your most precious resource, cash, at risk. Leasing, on the other hand, is designed to preserve your cash. When you lease a van, you are entering a long-term rental agreement. You pay a fixed monthly fee to use the vehicle for a set period. The upfront cost is dramatically lower, often just the first month's payment and a security deposit. This means you keep a large chunk of cash in your bank account where it can be used for operating expenses like fuel, payroll, marketing. This is a monumental advantage when you are trying to manage tight cash flow. It lets you get a new, reliable vehicle on the road and generating revenue without gutting your savings. The benefits of leasing extend beyond cash preservation. First, lease payments are predictable, fixed monthly expenses. That makes budgeting and cash flow forecasting much simpler and more accurate. You know exactly how much to set aside for the vehicle each month. Second, lease payments can often be fully deducted as a business expense, lowering taxable income. That provides a tangible tax advantage many buyers don't get as straightforwardly. Always consult a tax professional. Leasing also helps manage maintenance and reliability. Leases are typically for newer vehicles still under the manufacturer's warranty. That reduces the risk of unexpected, costly repair bills. At the end of the lease term, you return the van and can lease a brand new one. That keeps your fleet modern, reliable, and efficient without selling an old vehicle. For a business scaling from 1 van to 6 vans, leasing provides a flexible, cash-conscious strategy. It lets you expand capacity based on predictable costs, not massive capital investments. So, think about that when you make your choice. The goal of earning $1,000 per day is not a distant dream. It is achievable. It's built on simple daily math. This is not about revenue. It's about the actual cash left after daily operating costs. Money you can reinvest, save, or pay yourself with. Let's break down the numbers. The plan hinges on knowing your numbers, cost per van. This clarity empowers daily decisions. Calculate total daily operating cost per van. Be ruthlessly thorough. Do not guess. List every expense and convert to daily. Include variable and fixed costs. For example, fuel, $80. Driver wages, $150. Lease, $40 per day. Insurance, permits, licenses, $20. Maintenance reserve, $20. Administrative overhead, $10. Adding it all up, total cost per van per day, $320. Now determine your revenue target. Net cash equals revenue minus cost. Set a reasonable revenue target per van, $500. Subtract $320 from $500. Result, $180 net cash per van per day. $180 is your real daily profit. That's the number that matters. With $180 per van, scaling to $1,000 a day is simple multiplication. 1 van nets $180, 2 vans, $360, 3 vans, $540, 4 vans, $720, 5 vans, $900, 6 vans, $1,080. You crossed the $1,000 target. You have just crossed your target. Simple math, clear, tangible roadmap. Run 6 vans efficiently to generate over $1,000 a day in pure cash. Yeah, you know, that's the straightforward path. Scaling from a single van to a fleet of 6 is a marathon, not a sprint. It requires patience, discipline, and a strict adherence to your financial plan. Uncontrolled growth is one of the fastest ways to trigger a cash flow crisis. Each new van you add increases your revenue potential, but it also dramatically increases your monthly expenses and operational complexity. The key is to grow methodically, ensuring that each step is built on a solid foundation of profitability and positive cash flow. This measured approach will protect you from the very risks that cause so many rapidly expanding companies to implode. Timeline: Month 0, 1 van. Month 4, 2 vans. Month 8, 4 vans. Month 12, 6 vans. The journey begins in the first few months with just 1 van. During this initial phase, your sole focus should not be on expansion. Instead, it should be on optimization stabilization. Your mission is to perfect the operating model for that single van, track every penny of income and expense, work on improving your routes to minimize fuel consumption, minimize empty miles. Focus on securing 2 steady, reliable clients or 3 steady, reliable clients who pay on time. Your goal is to make that one van as profitable and efficient as humanly possible. During this time, you must also build a cash reserve aiming to save at least 1 full month of fixed operating costs in a separate bank account. Once you have stabilized your first van and built a cash reserve, you can begin planning for your second. This typically happens around month 4 to 6. Use the net profits generated by your first van to fund the expansion. If your cash reserves are still lean, this is the perfect time to use leasing. A lease will allow you to acquire your second van with minimal upfront cost, preserving your precious cash cushion. Do not add the second van until the first one is consistently hitting its daily net cash flow target. When you do add the new van, expect a temporary dip in overall profitability as you work to fill its schedule and iron out new logistical challenges. With 2 vans running efficiently, the scaling process can accelerate. The combined net cash flow from both vans will allow you to save for the next expansion much faster. The principle remains the same. Reinvest the profits to grow the fleet. You can aim to add a new van every 2 to 3 months, provided your cash flow remains strong and your client base is growing to support the added capacity. By the time you reach 4 vans, you will likely need to hire a part-time operations manager or dispatcher to help manage the increased complexity. This is a crucial investment to free you up to focus on sales and strategy rather than getting bogged down in daily logistics. This disciplined, step-by-step reinvestment is how you scale safely to 6 vans and beyond. Excellent cash flow management is impossible without clean, consistent bookkeeping. This is the unseen engine that powers your financial decision-making. You do not need to be an accountant, but you must adopt simple, non-negotiable habits to track the money moving in and out of your business. The first rule is to use a simple, cloud-based accounting software. Ditch the shoebox full of receipts and the messy spreadsheets. QuickBooks ZeroWave. Connect your bank accounts, send invoices, and see your finances in real time. This is not a luxury, it is a necessity. Open multiple business bank accounts for specific purposes. One for operations, one for taxes. When a customer pays an invoice, the full amount goes into your main operating account. Immediately transfer 15% into your tax savings account. This is not your money. It belongs to the government. Segregate it to avoid spending your tax reserves. This habit prevents huge stress at tax time. Keep meticulous records, your defense in an audit, and your tool for finding hidden profits. Capture every single receipt. Use your accounting app to snap a photo immediately. Fuel client lunch office supplies. These small deductible expenses add up and reduce your taxable income. Without receipts, you cannot claim deductions. It is that simple. A few minutes of daily record keeping saves thousands yearly. Finally, do not be afraid to invest in professional advice. Good bookkeeper tax advisor who specializes in the transport industry. They will ensure your books are clean. You are compliant with all regulations, and you are taking advantage of every legal deduction available to you. They can advise you on leasing, buying, and help you structure your business for maximum cash efficiency. Trying to handle complex tax matters on your own while running a growing business is a recipe for costly mistakes. Success in business is the product of daily habits. To gain absolute control over your cash flow, you need a simple, repeatable morning ritual that takes no more than 15 minutes. This is your daily financial checkup. It is non-negotiable. Do it every single business day before you start dispatching drivers or answering emails. This ritual will keep you grounded in the financial reality of your business, and prevent small problems from escalating into full-blown crises. It is your early warning system and your steering wheel allowing you to make small corrective actions every single day. First, open your business bank accounts online. Look at the actual cash balance in your operating account. This is your starting number for the day. Know it. Feel it. Next, look at the balance in your separate tax savings account. Seeing that money set aside provides a sense of security and reinforces the discipline of not touching it. This 2-second glance at your real cash position is more valuable than looking at a month-old profit and loss statement. It is your reality right now. Second, review your accounts receivable. Open your accounting software and look at the list of outstanding invoices. Which invoices are due today? Which are now overdue? Your daily task is to send one polite follow-up email or make one quick phone call regarding a single overdue invoice. Just one. This consistent, gentle pressure is far more effective than letting things slide for weeks. You are signaling to your clients that you are professional and you expect to be paid on time. This small daily action dramatically accelerates your cash collection cycle. Third, review the day's planned expenses. Look at your schedule. How many vans are running? What are the estimated fuel costs? Are there any regular bills, like an insurance payment, scheduled for auto debit today? This quick review prevents overdrafts and surprises. Finally, as payments from customers come in throughout the day, perform your tax transfer immediately. If a $500 payment hits your account, log in and move $75, 15%, to your tax account right away. This ritual, check balances, chase one invoice, review expenses, and transfer tax, is the bedrock of world-class cash management. You now have the blueprint. The path from a single van to a stable, cash-rich business generating over $1,000 per day is not a secret. It is a system. It is built on the unwavering principle that cash flow is the only metric that guarantees survival and funds your growth. Revenue is just a number on a page until the cash is in your bank. Profit is an opinion until you can spend it. You must internalize this truth and let it guide every decision you make, from the clients you take on to the way you finance your vehicles. This is how you build a transport business that is not just busy, but genuinely prosperous. Your first step to be taken today is to start tracking your cash. Open a simple spreadsheet or a note on your phone log, your starting bank balance, your total sales for the day, and your total expenses. Do it again tomorrow. This simple act of daily measurement is the beginning of control. Your next step is to implement the two-bank account system for taxes. Call your bank and open a second, no-fee checking account. Start transferring a percentage of every single payment you receive into this tax account. This discipline will transform your financial health and eliminate tax season panic forever. Embrace the tools that give you leverage. Use leasing to protect your cash reserves when you expand your fleet. Use modern accounting software to invoice your clients instantly. Use deposits demand prompt payment terms to shorten your cash cycle. These are not complicated strategies. They are simple, powerful rules that the most successful small businesses live by. By focusing on increasing the net cash flow from each van and reinvesting those profits methodically, your growth from 1 van to 6 becomes an inevitable outcome of a well-executed plan. The road ahead is challenging, but it is no longer a mystery. You have the map, you have the daily disciplines, you have the clear financial targets, the power to build a business that lasts, one that provides you with freedom and security is entirely in your hands. Start now. Take one small, decisive action today. Track your cash. Open that second account. Make the choice to become a master of your cash flow, not a victim of it. This is your moment to build an enterprise that thrives for years to come. For more secrets on logistics, finance, and scaling your business, subscribe and continue your journey to mastery.